do you do with a commodity chemical company in an environment where people are still pretty worried about global trade, especially today when the president was, I say, trashing China? At the beginning of March, I recommended Trinseo. That's a Philadelphia-based maker, well, actually Berwyn, of plastic products, synthetic rubber, latex binders, along with basic building block commodities like polystyrene and polyethylene, because this is exactly the kind of company that thrives in a strong economy. But I didn't see the president's trade dispute with China coming, and I think that's hurt the stock. And because Trinseo gets 20% of its sales from the People's Republic, but I have to wonder if it's been punished too much here. In part, that's because we may end up reaching an accommodation with the Chinese, but mainly it's because Trinseo reported a darn good quarter 2 weeks ago. It turns out business is good, and the stock has been bouncing ever since. I wouldn't be surprised if it had more room to run. Don't take it from me, though. Let's check in with Chris Pappas. He's the president and CEO of Trinseo. Find out more about how his company's doing, where it's headed. Mr. Pappas, welcome to Mad Money. Good to see you, sir.
How are you? Nice to see you.
Have a seat. All right, so we were talking at the top of the show that there are companies that are doing incredibly well, but there's worries about a slowdown because rates are going up, or there's worries about Chinese trade. Trinseo really does fit that, doesn't it?
Well, we had a record quarter, as you know, as you pointed out. And we actually gave guidance on our earnings call just 2 weeks ago that we'd have earnings this year of $9.06 a share, which would be another record 3 years in a row. So we see the economy actually quite good around the world. Right. So we don't see anything changing.
Now, do you have to check every tweet and worry about what the president's meetings say with we have Secretary Mnuchin involved? These things do matter for you.
Well, we have business in China. I think this might be the focus, but our business in China is local, and so we make product there, we sell product there. So we're not really, in fact, impacted by the trade issues that may or may not come out of, whatever comes out of that.
Okay,
and that's true
good.
Around the world. Almost everything we make locally, the United States, Europe, China, and we sell it there. Our products don't move around the world that much.
Now, it's important for people to know you make pellets, you make a form. You're not making the appliance plastic. That's not what you do. You're not making the graphical paper. You're supplying.
Absolutely. We supply either a liquid polymer or a pellet polymer that people make a part out of. For example, a refrigerator liner, a tire, high-performance tire. That's a market we're in. Great market, growing 7-8% per year.
Who uses high-performance tire versus just regular commodity?
Well, today, 50% of the tires on the road have moved over a period of about 8 years to high-performance tires. These tires get better gas mileage, roll better, and raise the efficiency of a car.
Now, when Dow spun the company off in another form, there was far more commodity than there is now, right? That's not a commodity product for a high-performance tire.
No, it turns out today, based on the call we had a couple weeks ago, we guided to about $675 million of EBITDA, and about 480 of that, Jim, is what we would call generally not commoditized. Right. The rest is somewhat commoditized, and it is subject to supply-demand dynamics that would drive margin, like any commodity.
Okay, so a lot of times people are saying, hey, Dow, DuPont, that's levered to the price of oil, goes up when oil goes up. What is your relation to feedstock? Because a lot of that Dow is kind of a myth. I want to be sure we got Trinseo right in terms of feedstock. Yeah,
oil up, oil down. On our commoditized side of the business, 25% or so of the earnings, the driver of profitability there is operating rate. The operating rate of the commodity, styrene monomer, drives profitability, not the price of oil. On the other side of the company, generally we pass through feedstock. So if we make a pellet for a synthetic tire, we pass the commodity fluctuations through, and we have fixed margins. So we have contracts with our customers that take the price of the inputs, add a margin to it, and if the inputs go up, the margin stays the same. If the inputs go down, the margin stays the same.
Oh, it's important for people to know that not all chemical companies are equal. For instance, PPG, which is a company we have on a lot, they're being squeezed. Now, they're producing paint that goes to a Home Depot. You're not producing anything like that that's going to get squeezed.
Well, as I said, our customers, generally, we have contracts that say to them, if the raw material goes up, our margin stays the same, but the price moves up according to the raw material, and if it goes down. And for our business, for our customers, that's turned out to be a good model.
All right, but how about capacity utilization? Let's say everybody decides, hey, listen, this Trinseo is making a lot of money. I'm going to put up plants, make what they make. We'll make a killing. Yeah. I mean, that can be an issue.
Well, that would be an issue, particularly in this place we call styrene monomer. And there are announced capacities coming in China in that commodity. And as we said on our earnings call a couple weeks ago, we've looked at that, and we believe the operating rates for that commodity are going to stay about where they've been over the last 2 or 3 years, even in the forward 2 or 3 years. So we don't see that new capacity as having a big impact on that
All
dynamic.
right, one last question. There'll be a certain point where you're just spewing cash. If this continues and people continue to think that Trinseo is going to get hurt when it won't, what will you do with all that cash?
Well, we've had a good balanced use of cash, I think, Jim. We've returned about $430 million of cash to shareholders since we went public in June of 2014. So we've been pretty good about returning cash to shareholders, dividend, which we've increased, share buybacks, and we've been investing. We've been investing in growth in those more specialty-oriented products. And that's basically been our capital allocation program.
Well, that's exactly what we want. That's Chris Pappas. He's president and CEO of Trinseo. We recommended it. Okay, we didn't see the trade war coming, but you know what? There's a lot more to this story than that. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.